Welcome to Elevate the Game, where DFW's top leaders drop gems on success, strategy, and legacy with your hosts, George Abreu and Eric Badiwala. Let's get into it.
Hey everyone, my name is Eric Badiwala. I want to welcome you to our podcast, Elevate the Game. We're excited to have another guest here today. Before we get started, I just kind of want to share with everyone the point of this podcast and why we're doing it, right? So we're going to be interviewing different people from all different walks of life and businesses every single week, multiple times a week. And our goal is to deliver value however we can, right? We'll be talking about business, personal life, investments. And our goal through conversation is going to be for you to have some type of a takeaway that you can implement in your either personal life or business. It's been interesting having our guests here on the podcast, and their wealth of knowledge and just sharing what we know, right? It's experience share, so that hopefully you can take that and then grow. So that's the goal for us today, is just to give you valuable information and hopefully grow. For all of us to grow. So without further ado, I want to introduce our guest today, Mr. Bill Clark. Bill comes with a ton of experience, a wealth of knowledge. He was actually a financial advisor for over 40 years, sold his practice about 2 years ago, so he's actually retired now. Was in law enforcement for 25 years. That's actually where he started his career, and then also did 25 years in radio, financial radio. So he knows all about radio and interviews and podcasts. So this will be an easy one. So welcome, Bill. Thanks for being here today.
Thank you, Eric. I'm looking forward to this.
Yeah. So we'll just keep it easy, Bill, and have it as conversation, right? And just like we're hanging out at a coffee shop or something. So
Okay.
why don't we start off by telling the audience a little bit about yourself, how you got started in the financial advisory business and law enforcement. I mean, you've done so much. So kind of curious as to your journey, and then we can take it from there.
Well, I started out, my first career was in law enforcement with Dallas Police, and loved it. Best training I've probably ever had. I do have an undergraduate in music. Was a trumpet soloist and a vocalist, first tenor. And so anyway, started out in law enforcement, started out with Dallas. So I got great training on that. One of the things that I was asked to do by one of the law enforcement agencies that I worked with was to investigate a financial planning firm that had some complaints against it. And so they sent me in as an undercover agent into that financial planning firm. The firm had no idea I was law enforcement, and I just went to work for them. Went to work as a salesperson, and at night, whenever they'd close down, I would gather all the garbage from all of their offices and put it in a big bag and take it out to the dumpster. And a truck would be out there waiting for that garbage. And that truck was from the law enforcement agency I worked with. And I do that every night. So they were gathering evidence of what was going on. I did that for about 90 days. Fortunately, was able to get indictment on the two principals of that company. It was located here in Dallas. And the one of the outcomes of that was I really fell in love with financial advisory work. Now, I had an undergraduate degree. I also had a master's in psychology at that time. So I enrolled in the College of Financial Planning, which is out of Denver, and learned the basics of being a financial advisor because I really didn't know much about it. I mean, whenever the law enforcement agency said, "We're going to send you into this financial planning firm as a new employee," I said, "I know nothing about financial planning and investments." I said, "The city of Dallas doesn't pay me enough to have a check, so much less, I don't know anything about investment." So firms, as well as I would stayed as a cop, stayed as a law enforcement agent, and it was kind of a dual growth of learning to be a financial planner and staying in law enforcement. Had to feed my family, needless to say. And then I started building a firm in about 2000 and sold that firm in 2023. So it had it about 23 years. It was a great firm located in Frisco, and we had a couple of offices. Had way too many employees, but that's what happens. But one of the key things that I learned in that was to help our clients understand the purpose of investing, and that purpose is we want to make money.
Yeah.
But involved in that making the money are your values. You could make money by investing in a strip joint, probably make a lot of money. But if that violates your values, then you probably wouldn't want to do that. That's actually one of the things that brought me to your firm was as I was doing my due diligence on your firm, due diligence on the type of projects that you had already gone through and were working on, and then I met your principals. I was impressed with that, and I said, I'm going to put some money with them and see how they do. And if they do good, I'll put more money with them. If they don't do good, then I won't put any more money with them. So we're still in the initial parts of one of those apartment complex over in South Fort Worth that you're in,
Burleson.
and so in Burleson, I believe it is.
Yeah,
So it's too early to tell, but your rent rate's doing good, and so far I'm pleased with it.
Yeah, no, that's awesome, Bill. And look, I mean, you said a lot of good stuff there. I mean, I think values is number one, right? And I think it
Yes.
doesn't matter what you're doing, you have to align with the people you're doing business with. And everything is about relationships,
Mm-hmm.
And I think, it's funny. We started, in the real estate space in '06. And,
Okay.
my partner George and I, we're from Miami, Florida, right? And, that was one of the worst markets that took a, crash basically in '08. And you wouldn't imagine the type of fraud that was going on from everyone around us,
Mm-hmm.
right? And people would ask us like, well, hey, how are you guys making money in real estate? Well, we do it the legal and ethical way. You
That's
know,
right.
I was raised right, went to school, got a bachelor's degree in marketing and international business. I didn't want to go to jail,
Uh-huh.
so I wasn't going to take somebody's credit and try to buy the house with their credit and then do some cash out. I mean, it was wild,
Yes.
what we were seeing. So I think, as we've grown, being in the business 20 years now, and seeing that at the very beginning stages of our careers, was very important. If you uphold your values, and you do the right thing, and even if something goes sideways, right, or
Mm-hmm.
goes off track,
And it
if you,
can. I mean,
yeah,
there are things you don't have control of.
100%. And I'm sure, even in the financial advisory business, the market goes down. I have a buddy who he owns a financial advisory business here in Dallas as well. And he says, hey, the market's down or it's up and, and you have to learn how to adjust. But
Yes.
values is very important. So I'm glad that you saw that in us. And that's important that we have alignment, with our investors. But I think that's a great point. Like whenever you're going to do any type of business, with somebody or any type of transaction, if you're not aligned, number one, in what you believe in, and you're not getting that warm and fuzzy feeling from somebody, then you probably don't need to go that way,
That's
right?
true. And
No,
your
I'm
gut will
curious.
tell you many times.
Yeah, 100%. Intuition is amazing, right? Like, go with
Mm-hmm.
your intuition, go with your gut. But what inspired you, Bill, from, I think it's just such a crazy story. Here you are as, going undercover, right? And, I guess just because you busted those guys, is it you were like, man, you know what? This inspired me just to be a legitimate financial advisor where I could help people. Like, what was the driving force behind that?
I think you hit the nail on the head, Eric. Was uh, as I met with the clients of that company and met with the other personnel there, their heart was to do right for the clients. and
Yeah.
the clients were just looking for someone they could trust that knew what they were doing. You may be able to trust them. You don't know what you're doing. It's probably not going to succeed. But if you know what you're doing and you're trustworthy, folks will flock to you. I mean, that's
100%.
what happened to my investment advisory firm. Was we were very legit. We made sure that our clients first thing understood what we were talking about and what we were recommending for them, and then getting feedback from them. Is this make you feel good? Do you like this? And if you don't, let's go look at something else. And I even had clients that I didn't feel were a match to me. Maybe it just didn't feel right, and I would tell them, I really think you need to go shop for another financial advisor. I don't think our firm is right for you, because it all comes back to relationship and
Yeah.
trust. And that's again, that's why I feel comfortable with you guys.
Yeah. Well, that's a sign of integrity too, right? On your part, is when you can turn down business, right? And you don't want to just take it because you don't feel like it's a good match.
Right.
Um, so I mean, for sure. I mean, I think that that's super important. So I guess, when people were coming to you at your when you were a financial advisor, they come to you with, obviously I'm assuming, different sizes of portfolios or amount of cash that they can invest. I mean, what did you tell people if somebody came in and said, "Hey, I want to invest and I want to, grow my $1 million," how did you advise those people? Did you take a more conservative approach? Were you more aggressive? Was it based on their investment profile? Like, how did you put people in buckets to, push them forward, when it came to investing?
Well, we would give them risk management or risk test to find out what we would call their risk scores, which 100 would be, I'm all in, I'll go to the blackjack table in Las Vegas and put it all on black or something like that. A 1 would be, don't lose my money. That, just,
Yeah.
go stick it in the bank. In fact, put it in gold and hide it under the bed, stand at the end of the bed with a shotgun. That's a 1. So folks were somewhere between 1 and 100. The S&P 500 is like a 70 to 75 risk
Mhm.
level. And so we would find out what their risk level was. And about every 6 months, when they would come in for their reviews, we'd give them another risk level profile to see had that changed. Because if the market was, up and down, kind of like it was in 08 and in 1987, when we had, I know you're not that old to be in the business that long, but we had, almost every bank in Dallas closed. FDIC took them over because we were having such catastrophes in the real estate and the oil and gas business. When you have a downturn, your risk level may go from a 70 down to a 40.
Mhm.
And then also when you get closer to start needing that money to live on. So if you're working and you've got a good income coming in and you're sticking money in your 401k, and the kids finally are out of college, so you got a pay raise on not having to pay their college tuition anymore, and you're able to store that money, you can feel more. You can risk more. Your heart
Yeah.
says, if I lose a little bit or the market bounces up and down, I'm okay. But when you start getting to the point that you're looking at retirement, whether it's 60, 65, 70, I retired at 71 because I had health reasons to do that, but I really plan on dying in my chair. Companies would come to me all the time, Bill, we want to buy your firm. I said,
Yeah.
it's not for sale. I'm very happy. So you look at their stage in life in order to help them to determine what their risk level is, and then asking them lots and lots of questions. How do you feel about this? I would even ask them if you put $100 into an investment, And 6 months later, that $100 is worth $75. How are you going to feel? And they said, well, I wouldn't feel very good. Then that tells me they need a lower risk level.
Yeah.
And if they'd say, that just happens, then we would, we'd probably keep them at a higher risk level. But we'd keep checking in
Yeah.
because risk levels change.
Yeah, it's a very catered approach, and
Yes.
everyone's different. Everyone's got different risk tolerance, right? And we do the same thing, on the real estate side, right? When somebody
Hmm.
comes to us and says, "Hey, I've never done this before, but I'm curious and investing in real estate and, being a part owner of an apartment building," I challenge them. I said, "Well, have you looked at other operators, right? Don't just look at us, and if you have $100,000 to invest, maybe, right? But you're like, wanting to try, maybe multiple assets or whatnot, then diversify, right? Maybe put $50,000 with us, and then maybe put another $50,000 with another operator, and then get educated on the process, and then from there, you can scale." There's different vehicles, right, that you can invest on the real estate side, right? We have traditional syndications and we have funds as well. But depending on that risk profile, and some people sometimes say, "Hey, well, can I just come in with $25,000?" And typically, we don't like to come in
Hmm.
with that small of amount because it just makes our raises higher. But we have in the past, so very similar. There's similarities there in the financial advisory world and risk profile and what they're willing to do, and it depends on well, do you need more cash flow? Right? So this
Right.
particular deal will push out more cash flow, or this is a new construction deal, right? Where there's not going to be any cash flow, but your upside could be 3x versus 2x. So
Right.
what's most important to you? So I think we have a lot of similarities there, which is cool. So overall, Bill, like when people came to you, well, actually, I'm just curious. When you sold your business, what was your assets under management? I think that's cool to know, how big you were, if you don't mind sharing.
Well, it was almost 200 million.
Nice.
And
That's a lot of money to manage.
it is, it is. Uh, and For some folks, that's not a lot, but I was kind of a single person firm
Yeah,
with five ladies that managed me and helped with our company. I just brought on a young man to help uh, help transition. Because I was in my early 70s, and I said, maybe it's time to start looking to get out. And then in January 23, this was kind of interesting. January 23, my doctors advised me both of my kidneys failed,
oh wow.
and you're going to have to go on dialysis. Well, it's very difficult to run a firm and sit
Yeah,
in a dialysis chair. And so they fortunately designed a dialysis called peritoneal, which has been around a while, but basically I would do dialysis late at night, so I could still run my practice, but my energy level was down, and so that was kind of my preparation to say maybe we need to sell this. And so I was looking for like-minded companies. Ours was a Christian firm. We did biblically based financial planning.
that's
We
awesome.
used God's word in the training of our clients. And some clients said, we don't want to do that. I said, I understand. We're probably not the firm for you. We
Yeah,
believe God's word speaks God wants us to prosper, by the way. In Psalms chapter 1, verse 2 and 3, it says that he wants us to prosper. So his word gives us direction on how to do that. And so that's how we would manage money, was from a biblical standpoint. So I looked for a biblically based advisory firm to purchase us. I stayed on with them a year to help with the transition. And one of the things I was so pleased about is I think we only lost about five clients out of 100 that went somewhere else.
oh,
So
from the
so they
transition
felt,
on a sale.
yeah, it was a very, very good transition
Well, that's
from
awesome.
that.
Well, that tells you that you built a great business, Bill, and the foundation you set, based on, a biblically based, business, which is great. I mean, there's no stronger foundation. I'm a man of faith as well.
Yes.
I was raised Catholic, so and obviously everyone's got their different views there. But look, I think the point there is whatever you're doing, you need to have a strong foundation. Without that,
Hmm.
foundation and values, without that, your business doesn't survive.
Right.
Um, so man, $200 million under management, I guess what would be the best piece of advice that you could give listeners, right? Obviously, you've done a lot of investments, not only for yourself, but like for others, right? And managing their money. What's like, you know, I don't know, the best piece of advice you could give somebody that is looking to invest into something, like what's the best piece of advice you can give them? And it doesn't matter what it is, whether it be stocks, bonds, mutual funds, real estate, whatever it is. Did I lose you there, Bill?
Be
Did we freeze
educated
up?
on what you're investing in. And if you don't understand it, then trust the person that you're paying to make that decision with you. Uh, if I had lots of folks that were senior executives and multimillionaires, and they didn't want to go get educated. They said,
Yeah.
"Bill, that's why we're paying you to do
Hmm.
this for us, and you go get educated and tell us what to do." But
Yeah.
education is really, really key. And then go with and spend time with the principals. I always want to do that in order to get a reading on them. If I walk in there, again, I'm a Christian, and so I believe in the power of the Holy Spirit. The Holy Spirit, will reveal to me as I pray, is this a good person to be putting money with or company to put money
Yeah.
with? And if it's not, the little red flags go off in my mind, and I'm going, I'll keep looking. And
Yeah.
so uh, that would be the key thing, because you don't want to lose money. There's always risk in investment. It doesn't matter
Yeah.
what you go into, even a bank.
Yeah.
There's some risk in that, even though the FDIC is up to
Yeah. It's
quarter
only
of a million.
250K. I mean,
Yeah, you put more in there, they're only going to return the 250, and hopefully Congress will give you the rest. We'll see.
yeah. Um, just lost my train of thought. I was going to ask you something. Well, anyway, I'll go to the next question. But so,
Okay.
obviously, when you were investing with, and helping people invest, how do you keep people from losing money, right? Like, I think that's, obviously something that people don't never want to do, right? But like, how do you help them not lose money as a financial advisor?
Well, nobody wants to lose money. Warren Buffett's rule number one is don't lose money, and rule number two is go back to rule number one, don't lose money.
Yeah.
Uh, and so, again, keeping their risk tolerance in mind. If they were very, very conservative, I've had lots of widows that would bring their husbands millions in, and they didn't know what I call come here from Sikkim. They didn't know anything.
Hmm.
And so they didn't want to lose anything, because this was what they had to live on the rest of their life. But so we'd put them in things that were very conservative. But I would always tell them, said, it does not matter where you put your money, that you can lose money. You may not lose all of
Yeah.
it, but the values could go down. I mean, it's happened to me. Uh,
Hmm.
I owned 135 rental properties in the past, and in 1987, all the banks, or most of the banks in the Metroplex, went under
Hmm.
FDIC, and uh, the bank called my note, and so I didn't have $1.4 million sitting in my checking account to pay that note, and I couldn't get financing anywhere. So uh, the market changed, and so we lost those houses uh, for no reason that we could have seen, other than unless we just paid cash. But they were worth about $5.5 million, so
Hmm.
we were only in them at 20%. You just never know, but there's always risk in every investment. If somebody says, "Oh, there's no risk, you can't lose money," you can always lose money.
Yeah. I like to tell people, no risk, no reward, right? You can sit on the sidelines all you want, but if you want to grow, you got to take risk. And sometimes you're
That's
going to lose,
right.
and there's a lot of lessons in the losses, right?
Mm-hmm.
And
Yes.
what most people don't realize is like nobody likes to lose, right? But when you lose, you probably get 3x better,
Yes.
you
You
know?
really do.
And it really catapults you to the next thing, right? And if you're, a person of faith, normally there's another door there for you, right?
Hmm.
And actually going back, I remember my train of thought from the last question was, even if you hire a professional, which you should always do, right? And if you're not trying to reinvent the wheel, and we like to do the same thing, right? Like a lot of people want to buy apartment buildings, but they don't know how to operate them, right? So that's why people
Right.
invest with us because we've been doing this for a long time. We've been in the real estate business for 20 years. We know construction, have an in-house management company, and it's hard work. But if you were trying to learn that today, it would take you years to catch up to to where we've been. But sometimes it doesn't matter, how good you are. You could do everything right. And because of market conditions, there's always a risk of losing money, right? No
Yes.
baseball player bats 1,000 for 1,000, right? It just
That's
doesn't happen.
exactly right.
There's always some type of, risk reward and but if you do it long enough and you make the right decisions, you hire the right people, you partner with the right people, you have the right relationships, you have a good foundation, good values, for the most part you're going to end up on the reward side versus the losing on the risk side.
Hmm.
So, man, I think that's been, great stuff. And, these are, these are almost common sense things, right? But sometimes you just really need to like drive them home, sometimes to be able to, say, you know what, let me go out there and just get this done, right? Let me go hire the professional. Let me go out there and
Right.
take a risk. Let me go out there and align with my values on somebody and let's take a chance. So I think, the message to people is, go out there and you know align yourself with the right people, with what you believe in, and take a chance, right? And I think it could benefit you if you do. And speaking of chances, I know you took a chance with us on our deal, and I know you kind of talked a little bit about it, but look, you got a ton of experience investing and investing for other people. What did you like originally about the deal? And not only just about us, because I know you looked at us and our values aligned and stuff, and obviously we met in person. But what did you like about the deal specifically, and how did that relate to like your background, right? What were kind of some of the things you looked for when you were evaluating? Because whenever you're looking to invest in something, you're looking at the deal and you're looking at the person.
Right. I thought your due diligence on purchasing this apartment in Burleson was extremely good, and that you were very conservative on your numbers. You were not pie in the sky. You were not doing anything really that I thought was outside the realm of possibilities. You're in a good area. You're bringing in new management into the apartment, as well as doing some things to kind of spice it up. I think you put in a
Yeah.
fenced area with playground equipment and a little dog park, things like that. So you did things and it had just been built, so it was still in essence brand new. Uh, the market was ready for it. You didn't have a whole lot of competition, and South Fort Worth is growing.
Yeah.
Burleson, all that area. I went to school in Fort Worth, did my master's and most of my doctorate in Fort Worth, so I knew that area well. I even did a trumpet concert at First Baptist Church in Burleson.
Oh, nice.
So I knew the area very well, and so that was one of the key reasons that I went with you. And I like investing close to home that I can drive
Yeah.
there.
Yeah.
Uh,
Touch and
I've
feel it. Yeah.
invested with, yeah, that made it very nice.
Yeah, I think, that's a good point too. Sometimes, people, they look at maybe different operators, when we're talking about, apartment investing and they say, well, hey, this is a great deal in Ohio, but, I live in Florida. So sometimes if you want to just take a drive by and see what's going on, like, hey, is that
Hmm.
fence up? Is the dog park up? You can just take a
Right.
drive by, or reach out to the operator and say, hey, do you mind if I go by and check out, the renovated leasing office? So, I think that's another good point. If you're just kind of getting started, it may be a good idea just to invest with an operator that is local, or even if you're an
Sure.
active investor, right?
Hmm.
Invest in something that's local because there's more challenges when you're doing things out of state or, in another city, even if it's 4 hours away. There's just
Right.
more challenges, right? You don't necessarily have all your contacts. You may not have all the contractors. You may not have the right management company. So staying, local to home is pretty good. But yeah, man, Burleson is great. It's crazy how much retail is around there. I mean, you could
Hmm.
you could go to Outback Steakhouse, you can go get a massage, then you can drop off your mail at the UPS store, you can go get your nails done, you can shop at Dick's Sporting Goods, you can go to AMC movie theaters. I mean, you can do yoga. I mean, there's so many things around there. It's just
Yes.
crazy the growth is. And, that particular deal, we bought it at a great basis. Obviously bought it from, not direct from the developer, but, we were the second buyer after the developer, but they left a lot of stuff on the table. They just didn't, that operator that bought it just didn't do a lot. Just didn't do a lot with it. So, happy that, you took a chance with us. And I know we're in the early stages, but we think that that's going to be a great one. And, you make your money when you buy, right? I think we bought it at a great basis, so we should do pretty good there. Um,
Oh, and I love the K1 that I got showing the amount of tax deduction that I received on that. I was very impressed with that. Thank you already.
yeah, depreciation, man. That's another one that, that's why people invest in apartments. It's nice to 2x your money over a 5-year term, but when you can
Hmm.
not pay as much money to the IRS, I mean, that depreciation is huge. So those are, and the biggest tax benefits depreciation wise are in the multifamily space. It's in the IRS tax code, and it's a luxury. Most people are happy when they get that first K1 the first year because that's when you have the most of the depreciation. You get the bonus
Right.
depreciation. So
Uh-huh.
anyway, glad you're happy with that, Bill. I mean, and 100%, bonus depreciation is back, thanks to the new administration. So that's awesome. And, we're looking forward to, delivering some more tax benefits to, more people. So anyway, I
Right.
want to be mindful of our time here, Bill. I think this was great. We're going to wrap up here. Let's stay on for a couple minutes once we end, but really appreciate your time here, Bill. You were a wealth of knowledge, gave, some pretty good tips. I mean, from a finance perspective and, kind of inspiration perspective too, right? Like being better after an experience. I mean, I think that's so cool that you were doing undercover work and became a financial advisor, sold your practice, were successful at it, and just made this world a better place and brought people up with you at the same time.
Thank you, Eric. Enjoyed it.
Yeah, appreciate it. All right, guys, till next time. Thanks, Bill, and it was awesome having you here.
Thanks for listening to Elevate the Game. If you're a mover and shaker in DFW with game to share, apply to be a guest at elevatethegamepodcast.com/guest.